Hello everyone, welcome to the weekly AV presentation of Indian equity market. Previous week, Nifty surged by 2.16%, while this week it corrected by 1.48%. We can infer that volatility is high in the market. This week, metal, media and FMCG index plunged more than 3%, while pharma and banking index declined around 2%. IT stocks closed in green as normally is the case. They are negatively correlated with index. The US Federal Reserve raised interest rate by 25 basis points on Wednesday and signaled a faster pace of increases in 2017. The rate hike can be seen as certainty by financial markets in the wake of a string of generally strong economic reports. The US Fed last increased the interest rates in December 2015. Improvement in employment data has given strength to the Federal Reserve to go ahead and hike interest rates. Fed sounded hawkish with respect to hike in interest rates next year. The Fed's median outlook for rates rose to 3/4 points increases in 2017 from 2 as of September. This has reduced chances of RBI further reducing rates in India, as this would result in flight of foreign investment out of India, putting the rupee under pressure. Index outlook. A fall in market, however, is unlikely in the coming week due to lack of domestic as well as global cues. Overall, the market is expected to be range-bound for not only the week but also fortnight due to less volumes at FIS desk. Usually in the last fortnight of every year, volumes are always thin due to Christmas vacation. Quarter 3 results are expected to remain under pressure due to demonetization effect. Economic Survey and Budget 2017 are the next major event keenly awaited by market. It is expected to be a populist budget. On downside, support near 7,950 and 8,000, and upside resistance near 8,300 and 8,350 can be seen. Cyrus Mistry was ousted as director of TCS at an extraordinary general meeting where the only agenda was to seek his removal. In results announced late Tuesday night, TCS said 93.11% of shareholders, that is a huge number, had supported the resolution to remove Mistry as a director. Among institutional shareholders, 44% abstained, while 57.5% of the remaining backed Mistry. The meeting was conducted by Aman Mehta, an independent director, who said that independent directors had met in advance and determined that this dispute has a material impact on functioning of the company. Once trust is lost, it is best for nominated director to resign. The decision had been unanimous, he said. Tata Sons has increased its stake in the 6 remaining listed companies whose EGM is scheduled in the coming days to bolster its chances to securing a favorable vote against Mistry. Index overview. On Monday, Nifty made bearish belt hold pattern as opening level was highest point of the day and made a large red candle with small lower shadow. It corrected by 1.1% ahead of FOMC meeting. On Tuesday, the index opened in green and closed near a day high of 8,228. On Wednesday, Nifty remained volatile as it swinged between 8,229 and 8,165. On Thursday, as expected in our previous AV presentation, market responded to Fed rate hike in a matured manner. The index opened in red, but strong buying was seen and Nifty closed with just 0.35% loss at 8,153.6 level. On Friday, the index was range-bound and traded between 8,150 and 8,130. This week's stock to keep on radar is Cadila Healthcare. Williams percentage R is below -80. If it moves above -80, long position can be taken, and risk-averse investors can wait till it crosses -50. Consistent price correction can result in Williams percentage R to remain below -80 for prolonged period. Watch out for green awesome oscillator candles. Broader markets are expected to remain under pressure, and pharma and IT sectors are expected to outperform the broader market as they are less affected by demonetization, whose after effects will be seen in Q3 results of the companies. Current market price 376.2, target price of 410 to 420. Buying zone 370 to 355 with stop loss of 340. Duration of 3 to 4 weeks. Thank you for sparing precious time for watching the weekly market report of Pawan Kumar Parmeshwar Lal.